Good afternoon and good morning to our participants joining us live. My name is AJ Virostek. Appreciate your time in joining us today. We're going to give it a few more minutes for some additional participants to join, and then we will get going. Thanks so much for being here. We're a few minutes past the top of the hour, and it looks like our participants stream has slowed down to just a trickle, so we'll go ahead and get started. Again, thank you all for being here and taking time out of your day. Happy to present our case for automation and finance for you today. Again, my name is AJ Virostek. I'm the Senior Partnership Manager here at Bill, and I'm joined with Andy Gauthier. Andy, please introduce yourself as well.
Thanks, AJ. Great to be here. Everyone, my name is Andy, President and CFO Consultant with Mighty Financial. We provide fractional finance and accounting solutions to startups and small businesses that don't quite need full-time resources yet. And I'm happy to be here and have this discussion with you, AJ. For quick background on myself, technical accountant by trade, also previously co-founded a technology startup in the bookkeeping automation space, and I've been running Mighty Financial for the last 4 years now. 4 years next month. So
Awesome.
Excited to be here.
Well, congrats on and happy early anniversary on the 4 years next month. We appreciate you being here, and thank you also to the Successful Bookkeeper for having us. Now, I wanted to keep things a little bit more informal and more conversational for everyone today. If you do have questions during Andy and I's discussion, please put those in either the chat, or there is a Q&A section. We'd love to make sure that we address those questions as they come up live and in real time. And if you don't think of it right as it occurs, we will also leave some time at the end as well for questions and answers. So all that being said, let's get to it. Andy, I know you and I have been in contact for the past probably 8-9 months as you had joined the Bill Premium Account Referral Program. And since our time knowing each other, we've talked a lot about clients who are still spending time mailing out paper checks to their vendors. What sort of issues or problems have you seen this create for companies?
Absolutely, AJ. It's been great getting to know you the last 8 to 9 months. And for a little bit more context, I've been familiar with Bill.com and user of the platform for probably about a decade now, if I think back through my career. So happy to kind of dive in and talk about some of the challenges with physical checks that have plagued the accounting industry for a while. The biggest risk, I think, is exposure and sharing information, sensitive information getting in the wrong hands. There's risk of check fraud going out because people have access to the account number that's printed on the check. And I think that's the biggest risk that is solved for here, security of cash and funds. There's all sorts of other problems that physical checks create. Some of the more obvious ones are the additional costs associated with processing physical checks. So you need to buy the check stock, you need to have toner in the office, you need to physically be in the office where the check stock is. There's risk, again, on exposure with that check stock being stolen and theft there. And then you have all the incidental costs associated with mailing out physical checks. So you have postage, envelopes, again, just the time it takes to print, troubleshooting printer errors, all sorts of challenges like that. And then one that's like a less obvious issue with physical checks would be the delay in vendors receiving critical payments that might be time sensitive, and so that could cause repercussions across the company, right? If a rent check is received late, or other critical payments for insurance policies and things like that might cause bigger issues for the organization, and as a result make put the bookkeepers in hot water that are dealing with these services. So any way that there's an opportunity to automate and streamline this to speed up the payments, reduce risk in the process, I think makes a ton of sense. So
Absolutely. Now, you just touched on risk there, Andy, and there are a lot of risks that are involved with payment via check, as well as with ACH wires, credit cards, etc. What are some of the other concerns that finance leaders should be thinking of in today's day and age?
yeah, I mean, I think security should be top of mind for any finance leader. And we work with a lot of startups, and the number one job of any startup CEO is to make sure you don't run out of cash. And one way to ensure that is to safeguard that cash. And that's the job of the accounting team, finance team, and many small organizations, the job of the bookkeeper. And so tightening the control over who has access to sensitive information is important. We're seeing a lot of increased activity through way of email phishing attempts, fraudulent bills from fraudulent vendors being sent to accounts payable email addresses. And you can see it on the news pretty regularly, actually, large organizations that are scammed out of very large sums of money. But we also see that across our customer base where there's just fraudulent attempts to move funds, whether spoofing an email from the CEO requesting an immediate wire for something important. So it's just important to be vigilant and verify payments beforehand and make sure there's the right internal controls in place and approval flows. There's also, it looks like someone in the chat sees these phishing emails often. So glad to hear I'm not the only one seeing them. And yeah, so I think just being vigilant and if something doesn't seem right, double check it. One policy that we have here is we always verify a payment. So first of all, we're using tools like Bill.com to require certain business leaders to approve payments, to approve the validity of the bill before a payment goes out. And that helps, but we're also occasionally payments might be made through like online banking wire or something like that. And if the controls aren't set up, one way to reduce risk is pick up the phone and call them and verify, did you ask to approve this payment or did you ask us to expedite this payment? Generally speaking, there are a few payments that require actually being paid immediately. And if it waits till the next business day, it's probably not the end of the world. So my general advice is just slow things down and make sure you get the proper approvals before moving any money. With the increased scammers, there's also other less severe risks to the business. I think some that are more commonly known by bookkeepers, are just the pain of, we just got through January not too long ago, and the pain of 1099 season. Simple policy to put in place and reduce exposure risk is requiring a W-9 before payments are processed or before a vendor's added into a bill pay system. So little things like that can help reduce risk even further. And yeah, I think there's also a lot of virtual credit card solutions out there nowadays. One that I'm pretty familiar with was recently purchased by Bill, actually, Divvy. And the virtual credit cards help secure things a little bit more, because if a credit card is compromised, there can be specific spend limits on each virtual card. And it also reduces the administrative headache when you don't have to go to every vendor that's on that credit card, because you can just more tightly control how those payment details are shared. So lots of ways to reduce risk and exposure there.
Yeah, absolutely. It sounds like we could talk about that in a whole nother podcast. One thing you hinted on there, Andy, was the administrative processes. Sounds like you've used Bill historically in your career and know how much automation that it brings to organizations. And I know that the IDC recently, I think within the last year or two, published a report that said roughly 90% of businesses are still using manual processes in the back office. So, question for you is, why should bookkeepers and finance leaders in today's organizations care about whether or not they embrace technology when such a high amount currently are not?
Yeah, it's a good question, AJ. I think part of this goes with the old saying, like, you know, it's often said that within organizations there's a process and people follow that process. And when eventually someone questions, hey, why are we doing it this way? The most common answer is that's how we've always done it. And so just because there's a process doesn't mean it's the most efficient and effective process today. And that's especially true for organizations that have been around for a while. And the processes of yesterday may have been great yesterday or really, a decade ago or two, but they just aren't the most efficient or effective processes today. So I think any business, whether it's bill pay or any other function, accounting, finance, but also every other aspect of the business should be reviewing their processes on a regular basis to make sure that they're optimized, and leveraging tech where it's logical. I'm not a big fan of implementing technology solutions just for the sake of saying you use a particular piece of technology. And it really depends on the business use case and needs. But implementing technology where it's appropriate, just it can make everyone more efficient. And one of the major benefits of being more efficient, particularly for bookkeepers in the bill pay function, is they'll have more bandwidth and more availability, and they can choose to do with that what they like. Maybe it's spending more time with their family, maybe it's taking on an extra client or two, or maybe it's going deeper with the clients they're supporting and being a more strategic thought partner with the businesses they support. So I'm sure there's dozens of other things they could choose to do with their free time, but those are a few that are most common that we see.
Excellent. Now, you previously mentioned payments and some of the ways to mitigate risk around payments, including potentially waiting until the next day to verify that that vendor is real, that that payment needs to be made, etc. So around paying vendors, it seems as though a lot of organizations are reactive to the way that their vendors want to be paid. Some of them like to receive checks, some of them like to receive ACH payments, some organizations like to pay by credit card so that they can get rewards, etc. What are some of the problems with running processes based on the individual vendors, and how can organizations better optimize for cash flow?
Yeah, I think cash flow management is a big part of every business, and particularly small business. What we often see is business owners don't think about their cash flow as often as they really should, particularly in the I think the venture-backed startups that we work a lot with. And I guess there's a few different angles to this, but every business should be trying to optimize their cash flow and hold on to cash as long as they can, collect from customers early, pay vendors on whatever deferred payment terms they can. A couple different things that we often see are people paying bills when they're received, so that they get the bill, they pay it. And part of that is they want to be efficient and they don't want to touch the bill more than once, and they're already looking at it, might as well pay it. But in reality, maybe that vendor has net 30 terms or more, and you're effectively doing a disservice to your business by paying that early. So there are ways where we can streamline the payment scheduling to be more in line with when the payments are due, and make sure those payments are issued. Maybe it's a day before the bill is due or a week before the bill is due, so it's still received timely, but you're not giving up that cash several weeks before you have to. So that's one aspect, I think, of cash flow management. The other thing that a lot of small businesses don't always think about is more on the card spend. When card spend is appropriate rather than through traditional bill pay, there's usually benefits to that as far as the float that you get with those cards. And I see often business owners paying things on a debit card, which is neither secure nor helpful from a cash flow perspective. So I think when it's possible to get terms and pay through credit card, it can be great from a rewards perspective. And for those vendors that don't accept credit card payment for one reason or another, certainly drag out the process in your AP flow and pay them when it's due, but don't hurry up and pay them before that.
Great. You just mentioned pay by card, and I saw we had a question in our section from Jennifer about explaining more about virtual credit cards. Tell us a little bit more about your knowledge. I know you mentioned Bill and our acquisition roughly 2.5 years ago of Divvy, now rolled into Bill, called the Spend and Expense Management Tool. But if you could just tell our audience and hear a little bit more about virtual credit cards and some of the benefits you see in using those, that'd be great.
Yeah, absolutely. So there's a variety of virtual credit card solutions on the market now. I think one thing that's great about Bill is the fact that you can get both solutions with one organization that's been around for a while and is trusted and vetted. One of the things I've learned over my career is there's all sorts of technology companies popping up and offering a new way to do spend management or a new way to do X, Y, and Z. And my personal take on it is that it's much better to use the tried and true solutions than it is to test all these new options for handling the back office for a small business, because cash flow and cash management, again, for the small business is so critical. Something you want to make sure the partners are quality partners when you're working with them. And so I guess to dive more into the virtual card piece, most virtual card solutions that I've explored in the market have some form of spend control on each card. They typically allow you to spend or generate as many virtual cards as you want. So you can theoretically create one virtual card for each vendor that you're paying. That information can be saved or shared rather securely through the spend management platform. One of my favorite features of these types of cards is the fact that you can effectively approve a request for a card or know how much is being spent and what it's being spent for before the card is charged. So instead of chasing receipts and then trying to figure out transaction categorization, you can kind of get the approval beforehand, understand how the future transactions on that card should be mapped to your GL, and just speed up the efficiency of the bookkeeping process immensely. And again, the biggest benefit, I think, is safeguards cash. And so people don't have necessarily physical cards with unlimited spend limits or the ability to spend on any category of transaction that they want. And you can really specify, okay, this physical card that you issued to your sales reps is good for up to X amount of dollars per month. And that budget resets every month. And you can define what types of vendors are approved or not approved. So I think there's all sorts of benefits to it, and happy to have a separate sidebar conversation on that afterwards with anyone that's interested.
Thanks for that. Although I did hear you single out some of the sales reps. We know that sales reps always submit their expense reports on time.
Always.
Now, I know the title of today's webinar is the case for payment automation. So Bill has been in the AP automation space since 2006, and we talked about manual processes and how a tool like Bill can streamline processes around setting up vendors for payments, routing the invoices to the right departments for approval, making and tracking payments, etc. Are there any particular benefits that you think are especially impactful for both clients and bookkeepers? And that's both with Bill and AP automation as a whole.
Yeah, Yeah, I mean, one of the things that I like most about the Build platform and some other similar tools is the ability to invite your vendor to enter their payment details. And so I think this reduces the risk of a bookkeeper accidentally punching in the wrong digit when entering a bank account number or a routing account number and causing funds to be sent to the wrong place. And it really puts the onus on the vendor if they want to get paid, electronically. They can jump in and um, enter their information. It also reduces risk in a sense from a fraud perspective, where if you did get a phishing email of some sort, assuming you send the vendor invite to the right vendor email address, you kind of reduce some risk there from those emails that are being spoofed. So that's probably the feature that I like most, and think it reduces a lot of risk.
What are some other considerations outside of risk that people should keep in mind, especially around approval processes for bills once they are imported into a system correctly from a vendor?
Geez, so I think there's a lot of things to consider, and we kind of talked about this a little bit already. I think AJ, in terms of making sure that you have the right tech stack for your business needs, and that you're crafting not just the tech stack, but the right setup of that tech stack and data flows for your business. So um, I think that the integration element is something that's really important. There's, for example, it's common for small business owners to say, "Oh, we just pay those bills through online banking." It's like, okay, cool. But now you have this double entry situation. It's incredibly inefficient. Um, and I know you said other than risk, but I think the risk here is time wasted, and also like when you duplicate data entry, there's just a higher risk of human error in one of those. So there's, I think that's one of the biggest areas for improvement that I see across businesses that are effectively double entering transactions in their GL system and also in online banking, with no connectivity between the two, other than maybe like a QuickBooks Online bank feed, which isn't ideal for a few reasons. So um, other factors to consider when thinking about any sort of tech stack or implementation, I think, is really better understanding what how the data will flow. And so is it a one-way sync? Is it a two-way sync? And which source of data is kind of the master, so that everyone that's using the software knows how to best use it. We run into issues all the time where people purchase software, don't properly implement it or train anyone on it, and then it becomes a thorn in their side as they try to grow and as the business evolves. Support's another big element. There's a lot of organizations that frankly don't have great support, and it's important to understand what level of support you'll get, and know that someone will be there to help you if and when an issue arises with a sync issue or trouble paying a particular vendor or whatever the instance might be. And then one of the more obvious, I say it's obvious, but often not, folks that are just setting up new and exploring new payment processing tools, the timeline for processing or the float involved. There's one solution in particular I've used in the past, which I won't name any names, but the timing, it was a prepaid expense card, and the timing to fund the card was something absurd, like 7 business days or something. So as you spend down, you get to a point where you need to replenish the value on the account to be used across your virtual cards, and it literally took 7 business days, which at the pace of small business, the pace that small business operates, it's just not particularly useful. And then you run into issues where, all right, you can't use a card because you don't have a balance. So then you have to we wire funds to them and wait for them to confirm, but they use an intermediary bank on the back end? Still is a headache, or do we use a different card or payment solution at that point? So I think that's understanding the timeline of both the vendors getting their money, but also if you need to fund an account to make it happen, like what's the timeline there? And then approval flows. I think QuickBooks introduced a bill pay option. I'm not too familiar with it. I think it's relatively new. And one of the things that comes to my mind is just how is the approval flow, and is there the right check and balance and ability to create custom approval flows based on certain needs. I see someone doesn't seem to be a fan of it in the chat. Good to know. And yeah, so I think we covered most of it there, AJ. It's like approval flows, timeline of funding, the support that you'll receive, and then one piece that we didn't really touch on is pricing. And I think with pricing for any technology, it's easy to say, oh, that piece of software is expensive, or this software is cheaper, and try to go with the cheapest solution. I mean, we as professionals should all know that the lowest price isn't always the best value. And so really understand what are the features and functions that you need, and does that exist in the solution that you're contemplating. And my bet is 9 times out of 10, the lowest priced option is not the right solution. And there's comparable solutions that will ultimately be more cost effective because of less time troubleshooting errors or issues, or just wasted time. So hopefully those are enough factors, but happy to dive into anything else if there's something else you're thinking of, AJ, there.
No, that's a lot of considerations, Andy, and I think when we're in our day-to-day lives, we forget about how many touch points we have with technology on a regular basis. It seems as though sometimes we take it for granted, but sometimes we forget to keep some of those points that you had just mentioned in consideration when running our companies. The one buzzword that we see day in and day out in the news is AI, and around AI is, oh, it's coming for our jobs. So why don't we talk a little bit more about that, AI and automation, and people may be wondering, if I'm paid by the hour when I'm working with my clients, wouldn't automation and introduction of automation into our workflows kill some of our time that we bill and potentially hurt the bottom line?
Yeah, it's a good question. For a little bit of context, I'm not an AI guru, but am vaguely familiar with it through the bookkeeping automation software company that we were building prior to starting this consulting firm. So I know enough to be dangerous, and I know that in order to properly build AI solutions, you need a lot of data points. And I think there's a couple factors here. AI, in my opinion, isn't going to take the job of a bookkeeper, accountant, financial consultant anytime soon. I wouldn't be in the business that I'm in if I felt that way. I think there are elements of AI that can help enhance and make accountants more efficient. And I think that's well known and well understood. For the folks that bill hourly, I think there's a few factors. One is, again, we touched on this a little bit earlier, but if you can do something more efficiently and you're billing hourly, that frees you up to take on more clients and continue to bill hourly for those clients and earn just as much, but just add more value in the work, small business community. Or it frees you up to spend that time doing more strategic work with the clients that you're supporting. So I think there's a few, or at least a couple very obvious ways that your earning power can remain the same and still bill hourly. I think the other argument there is, if you're billing hourly and you're doing more strategic work because some of the lower level entry piece is being streamlined and automated, you can generally command a higher rate for that more strategic support. And so there's ways that you can continue to bill hourly and actually earn more in the same number of hours being billed, or possibly fewer hours being billed. And then there's also the consideration that maybe billing hourly isn't the right business model in general. I think it depends on the customer, but there's been talk for the last decade, probably much longer than that, about value pricing and making sure that you're lining up your fee for the service you render with the value that it brings to the companies you're providing service to. And so I would encourage folks to try to think more along that mindset and level up and be a more strategic thought partner to the companies they support.
Excellent. And Andy, do you have any other tips for bookkeepers looking to stand out amongst their competition and acquiring more or even better clients than they have now?
Yeah, so actually, AJ, I was just catching up with an old friend who's in the bookkeeping space this morning, and literally moments before this webinar. Um, and one thing that he was sharing with me was that his firm has over the course of time, they've been too general in the customers that they support, and as a result, even though they were investing in marketing, it was hard to stand out, because when you talk about, we do small business bookkeeping and small business accounting, the message doesn't really resonate with all small business owners, because that small business owner doesn't see themselves as just a small business owner. They see themselves as an HVAC professional, or a restaurant owner, or whatever the case might be. They see it more industry based and very specific to their pain points and their needs as a business owner in a particular industry. And so I think the best advice that I could give here is to find a niche and really be focused on it and serve it well. We've done that here in a sense. Our focus when I started this business was on B2B SaaS technology startups. And more so recently, we started expanding and supporting some more traditional small and medium-sized businesses. But in our marketing efforts, what we're working through now is identifying what are the specific verticals and industries that we really want to get the messaging out to based on the companies that we've been successful supporting. And so that will likely be small services firms, maybe agencies, as well as e-commerce organizations, and possibly recipients of SBIR grants, to name a few of the specific types of businesses that we will likely be marketing towards in the future. And I think the key is start with one or a couple, figure out what you're really good at serving. You can look at your customer base and probably derive at least a couple verticals that you've done particularly well with supporting, and probably a few that maybe admittedly you might not be the best at supporting, and work to shape your business around those that you can support best and market to.
Great advice. Appreciate that.
Sure.
I know we're coming up on just at 30 minutes of our time together, and just wanted to thank you again for being here today and sharing your insights. Is there anything else you wanted to, share or talk about today while we have the time together before we kick over to question and answer?
Appreciate it, AJ. Yeah, I just want to thank you and the Successful Bookkeeper and the Bill teams for including me in this. It's always fun to talk shop and share some of my perspective on the accounting space. I'd welcome the opportunity to connect with anyone on the webinar that feels like a conversation would be worthwhile. And for everyone's general awareness, I guess, if you're a bookkeeper on this webinar and you're a solo bookkeeper, not sure if running your own business is the right way to go, or if you want to team up with a firm, we're always looking for good talent, so would welcome a conversation there. Similarly, if you're a bookkeeper and you love bookkeeping, but your clients need more enhanced strategic finance help, we do a lot of FP&A work, helping with fundraising, board reporting, and just some more strategic support for the small businesses we support. And we'd welcome the opportunity to explore supporting companies that you're currently working with, and kind of co-supporting them with you. We don't look to displace what's working in the companies we work with. We just want to augment the team and help companies be more successful. So yeah, just appreciate the time, and anyone on the webinar, don't be shy to reach out.
Awesome, thanks. So it looks like we have one question that we haven't gotten to in the question and answer from Jennifer. So we'll start there, and then we'll move over into the webinar chat with a question from Brenda. So first question is, of one vendor using bills or billing us for drug and alcohol tests, what would be the best way to make sure that they don't double bill for a test? A very specific question.
Sorry, AJ, can you repeat the question? Apologize.
Yeah, Jennifer says that she has one vendor that bills us for drug and alcohol tests. What would be the best way to make sure that they do not get double billed for a test?
That's a good question. Making sure that you're reviewing the bills in detail. I think one of the easiest ways to do this, I think, is implement some sort of PO process. So, anytime you're billed from a vendor, it's referencing a PO. If that PO is still open in your system, then it likely means they haven't billed you for it yet, and it's you do the old three-way match approach, if you will, and can process that more confidently. If you don't want to implement a PO tool, I've seen lots of companies do something less sophisticated, maybe in like a Excel or Google Sheet type template where they're creating POs in that way. I've also seen people use a notebook for POs in their business, and really just depends on the volume, I think, of those orders and tests and what's going to be the most efficient and effective for you. But I think a PO process would likely be helpful. Other than that, just thorough review of what's being invoiced for and cross-referencing prior bills that were paid to that particular vendor to make sure nothing's duplicated.
Great. The question from Brenda is, our firm has been struggling with going away from the hourly billing model. We've always based our invoices on transparency and the work we actually do. How would your model accurately reflect that? I'm assuming they're talking about the value-based model. Is that accurate, Brenda? Assuming so, since we can't hear you.
I think it's not the easiest to just switch from hourly to value-based or fixed fee. And so I think it involves a one-on-one conversation with each client, probably. One approach that you could take is say, look, here's the scope that we typically provide you on average for the last 6 months. It's taken us X number of hours. We just want to set that as a fixed fee for various reasons. One, we want to reduce our need to maybe track time as closely, or the administrative headache of billing you to the hour, or just make the pricing more predictable for them, right? There's a lot of benefits on their end in adopting and accepting a fixed fee model as well, from a budgeting and planning perspective. So I think, unfortunately, it's not send an email blast out and just tell your whole customer base that you're moving to a fixed fee and that's the end of it. Probably need to take a more methodical approach with it. But for new customers you add, you can, they don't know that you only have historically billed hourly. And so for any new customers you add, you can simply introduce this new pricing model, and over time, that should become kind of the default across your company.
Awesome. Jason wants to know, does Bill.com serve Canada? Right now, Jason, we have the ability to send payments from USD to Canadian dollars. However, unfortunately, we are still working on sending payments that are originating in Canadian dollars. Our team, I know, has been working on that. Don't have a specific timeline for that as of today, but definitely check back, as I know it's something we are looking into. Yeah. And Christy from our team said, yeah, if you can post up your information in the chat, Andy, that would be great. So we can, any company that wants to reach out could get in touch with you.
I'll do that. I'll drop my my email and my LinkedIn profile there for anyone that wants to connect afterwards.
Excellent.
Jennifer wanted to confirm what business you represent. So I represent Mighty Financial. We're a small accounting and finance solutions firm for small businesses and startups. And our mission is to help them get to the next level of success, whether that's ultimately selling the business or improving the enterprise value. And AJ is with Bill.com
Yep.
on the partnership side.
Yes. So just wanted, before our time expires here today, and I know that the Q&As are still trickling in, but I work at Bill and I run our premium accountant channel program. And so the value that our program offers to bookkeepers is we can help your clients and you spend less than 50% of the time right now on AP, increasing efficiency, speeding up the reconciliation with our two-way sync to many accounting platforms. Other benefit is we provide a 20% referral commission for clients that you bring to Bill, as well as offering those clients a 10% discount when they sign up for the Bill solution. So if that's something that firms here are interested in wanting to learn more about, you can navigate to bill.com/accountant-referral-program. And we have both a 20% revenue, or if you just want to offer extended discounts to your clients, that's another program we have. And right now we're offering a $250 Visa gift card as an incentive for any of your clients that sign up between now and the end of April. And if there are not any more questions for today, I know we're about 15 minutes before the top of the hour. Want to appreciate or thank everyone for their time. We appreciate you being here. We know you have busy work days, kids' schedules, etc., and taking time from your, for some of us, lunch hour, spend time with Andy and myself. We really appreciate it. Again, you have Andy's contact information in the webinar chat, and you can feel free to reach out to myself as well. And that being said, thank you all. Hope you have a great rest of your day and hope to speak to you soon. Take care.
Thanks, everyone.